India is being called a stock market superpower. Indian companies are ending 2023 on a high. There's a bull run in the stock markets. If you club all publicly listed companies in India, they're worth more than $4 trillion and mostly part of two exchanges, the Bombay Stock Exchange or BSE and the National Stock Exchange or NSE. Thousands of companies are listed on these exchanges and they're having a dream run. There is big money flowing into Indian markets. Indian companies have become more valuable. And how do you assess that? Through a company's market value. And what's that? The total value of all the shares of a company. Say there's a company called XYZ. One share of XYZ sells at 10 rupees and the company has issued 100 shares. So 100 shares will be worth 1,000 rupees. That's the market cap of XYZ. But if you want to buy this company XYZ, the price tag is 1,000 rupees. And when I say the Indian stock market is worth $4 trillion, it basically means the total value of all publicly listed shares is $4 trillion. Out of this, 1 trillion has been added in the last 3 years. So India is now part of an exclusive club. Indian stock markets are among the biggest in the world and Indian companies among the most valuable. Here's what the pecking order looks like. The Americans are right at the top. US stocks are worth more than $50 trillion, 50 trillion. China comes next. It's worth over $10 trillion. Japan, $6 trillion. The Hong Kong market, around $4.56 trillion. And finally, we have India at $4.16 trillion. Now, this is an important milestone. India has touched the $4 trillion mark for the first time. And the bull run is not over yet. Hong Kong's position is under threat. Indian companies are closing in fast. The Hong Kong market, as you would know, is in turmoil. It fell by 17% this year, all thanks to Xi Jinping and his erratic policies. And this trend is not set to reverse anytime soon. So Hong Kong will continue to sink, and India could surpass Hong Kong and become the fourth biggest stock market in the world. Which brings us to the next questions. What is working for India? What is driving this bull run? Broadly, there are two factors. Number one, the surge in investment from overseas. These are foreign institutional investors or FIIs. They could be independent investors or large organizations like the international mutual funds, pension funds or investment groups. Basically, the big money bags. Do you know how much they've invested in India? By December, FIIs had poured in around $18 billion into the Indian markets. They're making steady purchases. And why are they bullish on India? Because of the resilience of the Indian economy, that's the second factor. India is outperforming its global peers. In the last quarter, India reported a growth of 7.6%, which is way better than expectations. 7.6%. The earlier estimate was 6.5%. by India's central bank, the Reserve Bank of India or RBI. They'd expected 6.5%. India clocked 7.6%. So the overall trend is looking good. Inflation has been largely contained. It has dropped below the 5% mark. Industrial production is high. In October, it rose by over 11%, which is a 16-month high. And the trajectory looks good. Indian stock markets are benefiting from that. Good growth is good for business, plus leading markets are delivering sluggish returns. For example, returns from US bonds have dropped below 5%. What about US stock markets? They delivered a return of 6%. And how did China perform? Chinese stocks gave a modest return of 2.7%. Compare that to India. This year, Indian stocks have delivered returns of more than 10%. The numbers speak for themselves. This is why India is being called a stock market superpower.